from the heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Emily Chang.
I'm Emily Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, it is Super Tuesday for tech earnings. Apple beating across the board on the strength of iPhone sales and services. This ahead of new iPhones expected in September. We'll tell you what's coming down the pike. Plus, ads rebound massively. Alphabet also turns in a strong quarter as advertisers flock back, and Google's cloud division seeing a big spike as well. The search engine workforce growing 13% despite a hiring freeze amidst the pandemic. Much of that growth in cloud. And a mask-off reversal. U.S. health officials are recommending that even fully vaccinated people wear masks in public indoor settings in places where COVID-19 is spreading rapidly. What the CDC is saying about the about face later this hour. We'll get to all of that in a moment, but first I want to get a look at the markets with our own Kriti Gupta. Kriti, of course, the major benchmarks all ending in the red, and I wonder how much that CDC guidance had to do with it.
You know, that was part of the story, but it's kind of interesting that a lot of it actually came from abroad. We've been talking about this dip in Chinese shares for a really long time, and today was finally the day we started to see it really seep into broader sentiment. Take a look at what's behind me. The S&P 500 down on the day 0.5%, but a lot of those cyclical names, a lot of those yielding names, utilities, consumer staples, in the green this morning. It was really tech that took the brunt of the hit, and you can see it right behind me. The NASDAQ down a whopping 1.2%. Narrow that down to big tech, that New York FANG index, down 1.4%. And then, of course, the big whopper there, the NASDAQ Golden Dragon Index, those Chinese U.S.-listed stocks down over 5%. So let's just broaden this out here, and let's look at kind of the contagion that you're going to see around the world. Take a look at this chart really quickly. The S&P 500 in blue, and the white is the SOX index. We've been talking about the semiconductors companies really losing some of that momentum, and some analysts saying, well, that's because they're more aware or they're more exposed to that China story. And a lot of that regulatory scrutiny that we're now seeing bleed into tech shares, bleed into those Chinese ADRs. Well, the SOX index kind of got an early indication with just a little bit of a muted reaction. That's why you see them actually cheaper than the S&P 500. But Emily, let's get to the big story after hours, which is going to be those earnings stories like you mentioned in your intro. Let's just kick it off here with Apple in particular, because you saw a massive consumer spending kind of coming back, revenue beats, and of course revenue beats across all their individual segments, iPads, Macs, services, all doing much, much better. Even that, though, not able to keep the shares up. You can really see that selling conviction during the day spilling in to over after hours. I want to show you Microsoft and Google, well, Alphabet shares, but let's call them Google for this hit's sake. You do see Microsoft shares actually down as well. This has a lot to do with their cloud computing business. Those sales dropping, 50 or gaining, I should say 51%, but still not enough for a lot of those investors who are concerned about peak growth there. And lastly, Alphabet in the green. This, of course, following Twitter and Snapchat, their YouTube ad sales doubling to $7 billion. So that recovery trade, that advertising glut from last year, it's not there anymore, Emily.
All right, Kriti, thanks so much for the roundup there. Lots to get through today. I want to dig into the tech results, of course, starting with Apple. Record third quarter revenue, demand for iPhones, iPads, and services spiking as stores reopen globally, and yet late trading reaction, little to none, even with such good numbers. A similar pattern we've seen with other big tech results this quarter. Investors looking for that blowout report before they get too excited. I want to bring in Dan Ives of Wedbush Securities, who currently has an outperform on the stock. Dan, the Apple conference call has begun. Tim Cook starting off global, touting growth in India, Latin America, Vietnam. What are the highlights you pull out of this report?
Well, it's all about China. I mean, if you look, China, the growth there, it's been a jaw dropper. And that's a key to the Apple thesis and really the iPhone super cycle playing out. And it's a big part of why you're looking at roughly $2.5 trillion market cap. I think at $3 trillion as we look out into the next 6 to 9 months. I mean, Emily, I take a step back. This was really a drop to mic quarter across the board, especially when you factor the chip shortage that was supposed to be a $3 to $4 billion headwind for the iPhone.
So talking about headwinds, of course, we got that new CDC guidance today, and Tim Cook is talking about that now on the call. He says there is a growing sense of optimism among consumers, but that progress made is not progress guaranteed. He's talking about the Delta variant. He says the road to recovery could be a winding one. How do you think about that?
Yeah, and that's smart for him to lay it out that way, because ultimately, as we've seen, Apple, is always a lot more, I'd say, cautious, or probably more cautious than any other company in terms of closing their stores. They started doing in Asia when everything started to break in terms of COVID. But I think it all comes down to, this is going to be when they're going to be conservative in terms of guidance, but it all comes down to the underlying penetration story. You have 25% roughly of the install base has not upgraded their phone in 3.5 years. And if you look at sort of numbers in the street, is massively underestimating this demand story playing out. It's an elongated super cycle. They continue to underpromise and overdeliver, and that's why I think Cook has sort of navigated this, as well as sort of any Olympian could navigate any sort of a high wire act.
Tim Cook also saying that Apple's retail stores, almost all of them, are now open. And of course, we all need our devices, whether we're at home or at work or on lockdown or not. But, if the Delta variant becomes even more concerning, is that much of a risk to Apple? Or as certainly we've seen the company fare incredibly well through the pandemic, is there the opposite impact?
Well, I think retail, for anyone, of course, many listeners that have gone into Apple stores, I mean, that's a key part of the Cupertino really opportunity and what they've built in terms of that brand. So retail does drive sales ultimately, but that's still roughly, less than 10%. Most of it's through online channels. And it comes down to this 5G cycle. We're only in the first stage. So you could see this get a little bit elongated in terms of depending on what happens from a Delta variant. But ultimately, I think right now the street is massively underestimating the Apple demand story. And I think even if you look back at the last 3 months, you've seen that play out.
Meantime, we're seeing a tale of two regulatory crackdowns on big tech, both in China and the United States. Of course, we're seeing China crack down on big tech companies there. We're seeing the U.S. government crack down on big tech here at home. And I wonder how much of risk that is to Apple, of course, here in the United States. And given that they have so much invested in China, they're seeing so much growth there. Could the regulatory crackdown in China impact Apple at all?
Yeah, and it's a great question. That's been overhang even through the U.S.-China Cold Tech War and all the tariffs. But they are Teflon-like because a peak cycle, I mean, they're one of the biggest employers throughout China. And if you look at that, Cook's been able to navigate that well from a supply perspective. Remember, all iPhone production really comes out of China, but it's 20% demand. That's why the most important number in this print is really the China growth number. But of course, they're going to have to continue to navigate that. But if you look at the regulatory crackdown from Beijing against Chinese tech, it's really been something that's been a jaw dropper relative to the scale and scope. And you've seen a rotation added Chinese tech into U.S. tech. And I think when it looks at Apple, I mean, this continues to be something that they navigate extremely well. And I think it's shown again this quarter.
Meantime, we are expecting new iPhones to be unveiled in September. How big a cycle do you think it's going to be? Is it going to be a super cycle? And how does that play out to the end of the year?
Yeah, I think that's the key, Emily, is that the baton gets handed from iPhone 12 to iPhone 13. And our initial checks coming out of Asia show iPhone 13 could be 10, 15% higher than iPhone 12 pre-COVID. So I think that just shows demand looks extremely robust going into this 5G cycle that's playing out globally with what I view as sort of the best, really almost a golden jewel install base that's unparalleled to any other technology company. That's why I believe Apple's the name we look out. It's a $3 trillion market cap. And this is one, it's also a re-rating story. Look at that services business, almost a $70 billion run rate. I think that's worth $1.5 trillion alone.
Meantime, of course, services also setting an all-time record. Tim Cook on the call talking up Apple TV Plus offerings. Ted Lasso season 2 is back. I know a lot of people are watching that, but I want to turn to the other $2 trillion company, and that is Microsoft. Also, a big beat from Microsoft across the board. Not a lot of competition in some ways when it comes to the Windows operating system. What do you pull out of the Microsoft report today, Dan?
Yeah, knee-jerk stocks down, call it 2%. I believe this is one. It's a stellar print. I mean, when the Dell is done in Redmond, is just more and more transform Microsoft into a cloud juggernaut. That's $1 trillion opportunity in terms of cloud over the next decade. And you look at those Azure numbers, 51% growth, and they're doing it with the types of growth that, they continue to defy expectations. I think it just shows this remains a major cloud play. We're still only a third of the way through cloud penetration. Now, of course, Amazon, AWS, Google, IBM, and others. But right now, if I look at what Microsoft and Redmond are doing, it's a big part of the re-rating in Microsoft stock. And I think this is one, we'd be buyers on any sort of weakness.
Meantime, Microsoft saying that Teams, of course, a competitor to Slack, has 250 million monthly users. This is a product that exploded during COVID, and say we're headed back to lockdown or more restrictions in different parts of the country, different parts of the world. What does that mean for Microsoft?
Yeah, and Benioff and Salesforce don't acquire Slack if it's not the success that Microsoft's having on Teams, right? That, this has really disrupted the market. And what they're doing is they're expanding their moat in terms of collaboration software, more and more getting across applications. I think what's important here is that the more and more success they have within that install base as part of these upgrade cycles in cloud, they're just going to get more and more monetization. And unlike other FANG names that are in regulatory scrutiny, Microsoft, which has already gone through that in the 90s, early 2000s, they has a lot more flexibility to do M&A. We saw that with the Nuance acquisition. I think there's others.
All right, we'll keep our eye on that. Dan Ives of Wedbush, always good to have you here. We'll let you get back on those calls. Thanks so much for joining us. Meantime, AMD also out with results, the second largest maker of computer processors, reporting second quarter profit that more than tripled to $710 million. That is more than analysts were expecting there as well. The company giving a bullish third quarter earnings forecast, and the report also indicating that AMD is gaining market share from its main rival, Intel. We will talk about that and much, much more when we are joined by AMD CEO Lisa Su on Wednesday's show. You don't want to miss that. Looking forward to that conversation. More earnings after the break. Alphabet shares up in late trading after reporting second quarter results. A big rebound in digital ads. I talked to Alphabet CFO Ruth Porat. I'll tell you what she told me next. This is Bloomberg. Let's get back to earnings. Alphabet out with its second quarter results, reporting quarterly sales that top Wall Street estimates. The company saying sales driven by robust digital ad spend from marketers eager to get consumers buying again during an uneven pandemic reopening. I want to bring in Daniel Flax of Neuberger Berman to break down the results. And Dan, obviously, this is a completely different quarter than they had last year, this same time when advertisers were going through that massive pullback at the height of COVID. The demand apparently still there. What's your main takeaway?
Emily, it speaks to the innovation underway at the company. Obviously, Google or Alphabet's been investing throughout the downturn. The results were strong. Advertisers are coming back. But I think what's going to matter to this story over the next several quarters and really the next few years is the ability to continue innovating, investing in its people, coming up with differentiated solutions across search, YouTube, Google Cloud, really this broadening of the drivers. So a lot to like overall.
I spoke with Alphabet CFO Ruth Porat just before she got on the analyst call, and here's what she had to say about advertising growth. She said it was led by strong growth in retail specifically, but that it was broad-based, followed by travel, financial services, media, and entertainment. She did say that she couldn't give a lot of color on the current quarter because things are changing so quickly. A reference there to the Delta variant, CDC changing its guidance today. And I wonder how big a risk that is for Alphabet, given how much the company suffered when it came to that advertising pullback last summer, and what that means for the next few months if there's more uncertainty.
Emily, I think it is a dynamic. It's one, obviously, that all of us and certainly all the companies are contending with. I think we'll have to see how the next few months play out in terms of the Delta variant and the variants that will inevitably follow after the Delta. But what we're seeing here in the United States, and obviously depending on the country, globally, is that companies that are able to innovate and invest and deliver value to their customers, be it consumers or businesses, during this period, ones that aren't afraid to take risks and invest, they're able to come out stronger. And that's a really important part of, I think, the Alphabet story, certainly in search and clearly in their cloud business as well. So no question, it remains a very fluid environment, but that is going to be with us for the foreseeable future, in my view.
So let's talk about cloud revenue also jumping there, beating estimates, $4.63 billion. Google's cloud, still the smallest of the big three players, but investors very optimistic about it. Ruth Porat also optimistic about it. She told me that they're continuing to invest in the business. They're pleased with the results, continuing to build out their global footprint, their compute capacity. She specifically highlighted the progress that they have made in India. And what's interesting, this is a company that had a hiring freeze in the middle of the pandemic, but the workforce still grew 13%, and a lot of those new employees were joining the cloud division. How optimistic are you about Google getting a bigger piece of that pie relative to Amazon and Microsoft?
I think the cloud opportunity is significant for all three of those companies, Emily. What's important is that the market is continuing to grow, driven by new workloads in areas like artificial intelligence. Specifically for Google, it's very early. Clearly, Amazon is the leader, followed by Microsoft, who's done a terrific job with Azure. But with Google Cloud, under the leadership of Thomas Kurian, they have a very important role to play with their customers. When we speak to buyers and customers of Google Cloud, they find a lot of value in areas like analytics, like artificial intelligence. And so the company is in investment mode. I expect that to continue for the next several years. But you are seeing, and we saw it this quarter, and I think you'll see it over the next 2 to 3 years, outsized growth. And why that's important is, in addition to the top line, it makes Google or Alphabet a more durable business. We saw that with Amazon, with the Amazon Web Services. I think you're seeing something that is similar or rhymes, if you like, with Google Cloud. So a lot to like here, but it's a multi-year story.
Now, there are a lot of questions about return to work plans, especially with, the evolving Delta variant. I did ask Ruth Porat specifically whether Alphabet is reconsidering its plan to call workers back in September. Apple, of course, delayed their return to work until October. She didn't answer that question directly, but said that they're working very hard to build more flexibility into their model. Employees are responding to that. Even when they do come back in September, they'll be working in hybrid mode. And I wonder, do you see, a sort of new Google, a new tech industry in general, if all of these big tech companies can pull off this hybrid mode, working from home part of the time, in the office part of the time? What does that mean? And that could that start a sort of sea change in corporate culture for the more foreseeable future?
Emily, I think even before the pandemic, companies such as Google have done a terrific job incorporating a lot of the tools and technologies that they have built into their internal workflows and processes. And so the shift to going all remote was relatively seamless for some companies. Clearly, other companies have found it more challenging, and the environment is obviously difficult. What I suspect will happen over the next few years is that as more and more people get comfortable working remotely, clearly the tools are going to get better. In some cases, there will be more of a hybridized environment. In other cases, it will make sense for people to spend more time physically in the offices. But I think what's going to matter for Google and for other companies is whether they're able to continue collaborating and innovating effectively across their teams globally. That, to me, is going to be the magic. And that, in my view, is going to determine how effectively a company such as Google is going to be able to grow and ultimately deliver value to its users and advertisers, over the next 3-4 years. But this new environment is going to be with us, I think, for the foreseeable future.
Right. And of course has huge implications for the war for talent within the tech industry and the tech industry versus everyone else. Neuberger Berman Senior Research Analyst Daniel Flax. Always good to have you here, Daniel. Appreciate you stopping by. Okay, coming up, COVID cases jumping to a new record in Tokyo as the Japanese capital hosts tens of thousands for the Olympics. We'll have a report from on the ground next. And Apple earnings call underway. Tim Cook talking about the demand for the iPhone spiking as consumers gravitate towards 5G. Take a listen to what he had to say. This is Bloomberg.
We're only in the early innings of 5G, but already its incredible performance and speed have made a significant impact on how people can get the most out of our technology.
U.S. health officials have returned to tighter mask guidelines in a stunning reversal of earlier guidance. The CDC is now advising that fully vaccinated people should wear masks indoors in places where the virus is spreading rapidly. The change comes as the Delta variant continues to spread. We'll have more on this later in the show. Meantime, infections in Tokyo surging to a record as the country hosts tens of thousands of athletes and officials from around the world for the delayed Olympic Games. Bloomberg's Kurumi Mori sent us this report from the Japanese capital.
I'm Kurumi Mori in Tokyo. The capital city has reported 2,848 new COVID-19 cases on Tuesday. That's the highest daily tally ever, surpassing the previous record of 2,520 cases back in January. It's also more than double from a week ago, just as the city hosts tens of thousands for the Games. A 4-day weekend to celebrate the opening of the Olympics is likely to have led to a backlog of testing, which may be reflected in this record case count. Tokyo Governor Yuriko Koike says the city is now asking hospitals to prepare more beds for COVID-19 patients. And seeing that infections for those over 65 years old remain low, Koike stressed it's important for young people to get inoculated. Only about a quarter of Japanese residents have been fully vaccinated. Earlier, the Tokyo Olympic Organizing Committee announced that 2 more athletes from overseas who are staying at the Olympic Village also tested positive. This brings the total number of games-related infections to 155 people since July 1st. That's when the committee started announcing new cases. Experts had warned that the more contagious Delta variant could cause a surge during the summer. Tokyo is under its 4th state of emergency that's set to last through the Olympics and into the Paralympics.
Bloomberg's Kurumi Mori there will bring you more of her reports as the Olympics continue. Coming up, China's regulatory crackdown sends shares plummeting. But one experienced investor says it's a good thing and could create buying opportunities. That's next. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. I want to get back to all of today's market action with our Kriti Gupta. Kriti, you were zooming in on big tech earnings earlier, but you're zooming out now. What else are you following?
Absolutely. We got to talk about those Chinese ADRs because that really continues to be the major story here. This time it's actually seeping into the U.S. market. But I want to show you on a longer time frame really just where we are here. These are a lot of the Chinese indexes. You have the Hang Seng Index in red, the NASDAQ Golden Dragon Index in purple. You can really see how much they've slid from year to date. Really the latest slide, the latest acceleration really coming lower. And the big question here was, when does it seep into U.S. tech? And it's starting to do just that. That blue line there is the NASDAQ 100 stock index. And you're already starting to see it curve lower. I want to show you some of the individual movers, though, because like I said, this was really all about those U.S. listed companies from China. Let's just take a look at this. Sector-wise, it's been a pretty broad change. Now, of course, DD Global looks like it's unchanged, but I believe during the actual session, it was changing quite a bit. A major drop. It looks like it's paired those gains. Alibaba down 3%. And of course, you have that food company, Meituan in particular, taking the brunt of the hit, a down 11%. And even those semiconductor companies, the Taiwan semiconductor company ADR down 1.8%. So I really want to illustrate here that's not just one sector in China, one U.S. listed company. It's going from e-commerce companies to ride-hailing agents across the board. So here's the question: when does it seep into the U.S. markets? And this is the chart I really want to show you, because for the last month or so, you've seen the New York FANG index, those big tech companies actually take a little bit of a hit. And a lot of this index in particular, is actually exposed to some of those Chinese ADRs in addition to some of those big tech gains. And you can really see that in a month when tech outperformance in the U.S. has really been the story, this index has actually declined. Really shows you the selling conviction and the pressure when it comes to those Chinese ADRs, Emily.
All right, Kriti Gupta, thanks so much for the roundup. Meantime, Mark Mobius, the founding partner of Mobius Capital Partners, says he sees buying opportunities in China amidst this regulatory crackdown. He spoke earlier today on Bloomberg Markets. Take a listen.
What the Chinese government is now doing is cracking down on the big companies that dominate various sectors at the exclusion of smaller companies. So the regulatory crackdown is probably in the long run going to be good for the Chinese market.
For more on China's regulatory crackdown and how it's impacting the tech sector, I want to bring in Bloomberg's Austin Carr, who has a lot of experience working and reporting on China. And curious, Austin, for your take on this. You and some of our colleagues have a big piece out on how insiders are looking at this. And sort of like Mark says, it's not necessarily all bad news.
That's correct, Emily. Going into this, we assumed that there would be a broadly critical negative reaction to sort of this intervention by the government. But we were sort of surprised by hearing from venture capitalists and a lot of startup entrepreneurs that this crackdown was a bit long overdue, especially for the bigger tech players, that they felt like, for example, Alibaba or Meituan or Didi had been sort of acting in a way that was stifling some of the competition from smaller startups, either by forcing them to sell, taking equity from them, or forcing them to build on their platforms. So what this crackdown really signaled to them was this might level the playing field a bit and let some of these smaller startups gain a little bit, while not necessarily trying to destroy big tech, but just keeping them in check in a way that the U.S. so far has proved unable to do.
And interestingly, it's sort of a similar take as some might have here in the U.S. about the U.S. government cracking down on big tech here. How is China's approach looking compared to what we're seeing in the United States, where, it's almost in parallel? We're seeing the U.S. government, state attorneys general, take aim at Apple, Google, Facebook, and more.
Well, the key difference here is speed. As one source in China had told us, it took about 4 months to complete the antitrust case against Alibaba, whereas it's going to take years, if not longer, to do those same antitrust investigations into FANG companies, to Amazon, Apple, et cetera. Yesterday we saw a judge extend the FTC's deadline to refile an antitrust case, which, remind you, had been filed months and months ago. And we've been hearing more and more about these regulatory interventions in the U.S., but it's just taken a lot longer. Now, in China, the inverse is true because of the way the Politburo is run. They have a lot more control, a lot more close ties to the business sector, and they are able to act a lot more swiftly. There's pros and cons, of course, but so far what that means is they've been able to essentially do some of these actions overnight when it comes to, especially the case with Didi, just days after their IPO, seeing their security review, see them remove apps from the App Store in a way that really forces them to stay in check, whereas you just don't see that type of action or that type of speed being possible in the U.S. just because of the government dynamics.
Right. I'm thinking about the U.S. government's case against Microsoft, which, of course, played out over decades, plural. Chinese entrepreneurs hate this take, but the Chinese tech scene is often criticized for copycatting or emulating, is a friendlier term, Silicon Valley. And I wonder how that plays out after this crackdown subsides.
Well, there has been a sense in recent years that China has been changing that approach. I mean, if you look at a lot of the software innovations with apps like Alipay or WeChat, those are a lot more design innovative, one would say, versus some of the apps here in the US. So they'd already been veering away from that sort of more emulation copycat model. But with that said, what this intervention does is sort of force them to become more in the national interest. I guess the best rule of thumb would be in the U.S., we think about regulation in terms of consumer protections. In China, this is more thought about in what's in the national interest. So there was a sense that Alibaba and Didi were behaving in their corporate interest, but perhaps not in line with China's priorities. So this might sort of force a lot of the bigger companies to align with the national goals of things like artificial intelligence, semiconductors, sort of things that are more aligned with the CCP. And meanwhile, in the U.S., we're seeing sort of that more open-ended innovation that is not being top-down mandated. So we're going to see two very dramatically different approaches in the years ahead. Whether that will stifle innovation or allow it to open up for the smaller players is still TBD.
And I wonder, does it give U.S. big tech companies more of an advantage despite the scrutiny they're seeing on home turf? Could a Chinese crackdown on big tech there be good for Apple, Google, Facebook, Microsoft, Amazon?
I think at a global scale, yes. I mean, you're going to have more flexibility in how they're able to operate. Maybe they'll face less competition in global markets. Maybe they'll even face less competition. There's been, years and years of sense that, when is one of the super apps going to break into the U.S. market? I think this signals that that's going to be a lot more difficult for the bigger Chinese tech players to do. At the same time, for Chinese tech companies, it's also going to be very difficult for them to raise Western capital at this point. I mean, considering the big sell-off that we're seeing, it's going to be a lot more challenging given the opaqueness that has been happening in that market, and perhaps some hesitancy going forward to sort of funnel a lot of money through these holding companies, VIEs, in the same way as we've seen in recent years. So perhaps the one upside that the U.S. has is at a larger level, the larger big tech companies. But without that sort of broader crackdown like we're seeing in Asia, does that stifle the next generation of startups in the U.S. from getting too big before these FANG companies swallow them up?
Interesting take. All right, Bloomberg's Austin Carr, appreciate your analysis there. Thanks so much for joining us. Meantime, we had just heard from Mark Mobius a short time ago about that China crackdown. The veteran investor also spoke on Bloomberg earlier about his outlook for Bitcoin. He predicts the price will fall, which will in turn impact companies that invest heavily in cryptocurrencies. Take a listen.
I would be very, very cautious with these companies. The fact that they're buying these cryptocurrencies is I'm really surprised that Tesla's doing that. And I'd be very leery investing in such a company.
Coming up, U.S. health officials return to tighter guidelines for masks to try and stop the spread of COVID-19. We will have one take on the latest guidance next. And shares in Workday pairing earlier losses after the company confirmed a report that Amazon has discontinued using its human resources software. The report saying the failure of the deal is due to the database behind the software failing to scale as required to support Amazon's growing workforce. Workday says the mutually agreed decision was made more than a year and a half ago. This is Bloomberg. This is Bloomberg Technology. I'm Emily Chang in San Francisco. U.S. health officials now urging fully vaccinated people to go back to wearing masks indoors where infections are soaring. This as cases of the Delta variant continue to surge. Why is this mutation of the virus taking such a toll on much of the world? The University of Sydney's Professor Christine Jenkins explains.
This virus is a completely different beast to what we were dealing with Alpha last year. The evidence suggests it's extraordinarily contagious, and it has many features that add to that potential. And it's not just one thing. I've read papers that suggest that the viral load in an asymptomatic person in the first couple of days of infection is 1,000 times the viral load that was observed in the early Wuhan cases and then subsequently in more detailed analysis of the viral loads in people with alpha. We're talking about massive load of virus, probably a virus that prefers aerosol or at least is more readily transmitted by aerosol than simply by respiratory droplet infection. So I think aerosol transmission is a key thing. And then I think, the third thing is that we're seeing it in younger people, and younger people generally are, of course, highly socially mobile, tend to gather in groups, often forget about physical distancing because they don't have the same wariness about their own health. And the other thing about Delta, which we know, is that the spike protein mutation that is its feature has an altered configuration such that it fits more neatly into the ACE2 receptor, and that affinity for the ACE2 receptor and the ability to get into respiratory epithelium and through into to cause more severe disease is enhanced in this organism. So it can transmit itself more readily and it can infect more readily. And so it's a double whammy in terms of its potential to cause damage.
Christine Jenkins there, professor at the University of Sydney. So tragic, especially where vaccines are available. I want to get more now on the CDC's new mask guidelines. Joining us now, our Bloomberg senior editor for healthcare, Drew Armstrong, with today's big take. So, Drew, walk us through where Delta is surging across the United States and where this new mask mandate will really be relevant.
Yeah, I think we're seeing a number of Delta kind of pop-ups all around the country. Right now, the Delta variant is by far the predominant variant in the U.S. It is really the most kind of fit version of the virus, and so it is the main one we are seeing circulating right now. Where cases tend to be highest right now, we see a lot of warnings about high levels of community transmission, in the south and central parts of the country, Louisiana, Arkansas, Missouri, Florida, Alabama, Mississippi. But you're also seeing warnings about community transmission in, some bigger cities, including, I think we've seen a warning about, New York and some other places where we have, higher levels of virus transmission going on right now. But really, the big spot on the map is really the south and central parts of the U.S.
So I wonder how effective is this new mask mandate going to be? Because obviously, the virus is surging in places where there are more unvaccinated people, certainly other parts as well. And I just wonder, is this going to work? Is this actually going to help stop the spread?
Yeah, the real challenge for public health professionals during this entire pandemic is that the people who were most likely to take precautions and adhere to those precautions, are the folks who were most likely to get vaccinated and kind of take all of the other steps. And you have right now the outbreaks that we're seeing are concentrated in areas, frankly, where people did not want to follow all these public health guidelines. And so, telling them that, hey, things are different now, a year and a half into this, you should put a mask on. I think it's questionable whether or not they're going to get a lot of compliance in these places. So that may be a bit of a challenge from a public health perspective.
And, one thing I think many folks forget is that kids under 12 still can't get vaccinated. There is not a vaccine available to them. So for folks who aren't vaccinated yet, you're putting young children potentially at risk. The CDC also came out with new guidance on schools saying schools should fully reopen, but that kids should be masked. But when are we going to get a vaccine for kids? When are they going to be able to protect themselves?
We know that that's in the works. It's being studied right now. I would take a guess that it'll be sometime, late summer, early fall that we begin to see those roll out. It's certainly something, obviously there are risks of this virus, but, with pediatric patients, quite understandably, health researchers, pharma companies, regulators tend to be very, very cautious. when it comes to any kind of new drug or vaccine. And so those populations are going to be the last to get it in a case like this.
All right. Well, Drew, I know your team is working hard to continue to follow this story and where COVID, of course, is heading next. Bloomberg's Drew Armstrong there. Thanks so much. Meantime, coming up, we're going to recap the day's big tech results from Apple, Alphabet, and Microsoft. Here's how they're trading after hours. And quick look at Activision Blizzard shares ending the day down more than 6%. Employees at the video game maker calling for a walkout on Wednesday to protest the company's response to a recent sex discrimination lawsuit. They're also demanding more equitable treatment for underrepresented staff. Activision executives have called the allegations false and distorted. This is Bloomberg.
We set a new June quarter revenue record of $81.4 billion, up 36% from last year, and the vast majority of markets we track grew double digits, with especially strong growth in emerging markets, including India, Latin America, and Vietnam.
Apple CEO Tim Cook there talking on the earnings call about the company's growth. I want to recap the top headlines from Apple's results along with those of Alphabet and Microsoft. Joined now by our Bloomberg Tech executive editor Tom Giles and Bloomberg's Apple reporter Mark Gurman. So I want to start with Apple. Strong quarter, not a huge reaction in shares, not necessarily unusual, but this quarter is always interesting because it comes right before the new iPhones, which you always report are coming out in September. What are your headline takeaways?
Yeah, the big takeaway is the stock is not moving much, and investors don't seem to be so happy because on the call, they gave some guidance. They said that in the fourth quarter, the current quarter, they will see double-digit growth, but there's going to be a bit of a deceleration there. They also said that's going to be driven by a deceleration in services, which is obviously growing in importance. That was up 33% in Q3. They said it's going to be a bit lower than that for Q4, so a little bit of investor concern there.
Not a big movement across the board, really, despite Tom, Alphabet, Apple, and Microsoft pretty much blowing it out of the water. Why do you think that is?
It's another quarter of these companies doing very, very well and really exceeding most expectations across the board. These companies that really benefited during the pandemic when we were all at home, downloading stuff, watching shows on Netflix, using our iPhones more, using computers more, they all benefited. Now they're benefiting as we come out of the pandemic and the economy rebounds because of ad sales are coming back. Companies are reaching their customers via Google ads. Google advertising is up. Google subscriptions are up. As Mark pointed out, Apple's doing really, really well, and Microsoft topped expectations. But these stocks have been at or near records for day after day after day. And so to continue that trajectory, investors really need to see something that blows the roof off the, you know what I'm saying?
YouTube also looking good as far as the Alphabet numbers are concerned. We just got a quote from Sundar Pichai, who's been speaking on the call. Let's take a quick listen in to that.
This quarter, publisher partners earned more than they ever have from our network. We also paid more to YouTube creators and partners than in any quarter in our history.
I also spoke with Alphabet CFO Ruth Porat before the call. We're also talking to her right now after the call. And I think a big question for all of these companies remains antitrust. She says, Google was recently hit with a third lawsuit from states' attorneys general that they continue to believe that people use Google because they want to, not because they have to. But Tom, how big of an overhang is this antitrust scrutiny in the United States that could play out over years?
It's going to take a really long time. And we see an interesting contrast right now with China. China's trying to rein in its big tech giants right now, and they can do it by fiat, snap the fingers. In the U.S., anything that the state attorneys general, anything the DOJ wants to do is going to, or Congress for that matter, is going to take a really long time. And these companies are empowered. They've got a lot of cash. They've got a lot of firepower to fight back for year after year after year. Will there be an overhang? Sure. How much can these bodies, these antitrust regulators, how much can they change behavior? I don't think they have I don't think that can happen. I don't think they're going to change things fundamentally. I don't think we're going to see a breakup. At least that's what I can tell from so far.
Mark, we're waiting for the Apple Epic verdict to come in. How could that potentially change the game for Apple? Could that seriously impact the App Store bottom line?
I think the point you made a minute ago about Google, whether you have to use Google or whether consumers have a choice, is a fair point when you contrast it to the App Store. The App Store, you have to use the App Store. There really isn't a choice there. And in terms of the Epic trial, I think that is going to guide a lot of the headlines, and Congress, you'll see Congress and lawmakers really, craft up responses in regards to what happens there. My prediction is that the judge won't put any fines or force Apple to make any changes, but she'll probably condemn Apple to the point where they're going to be in a pretty bad position in the public eye.
Interesting. All right, quickly, you broke a story about Robinhood earlier today. We're waiting for the IPO, of course, to happen later this week. They're working on a new feature, you say. Tell us about it.
Very cool new feature. It's called roundup investing or spare change investing. Let's say you have a debit card and you buy a cup of coffee for $3.75. They'll round that up to $4. They'll put that 25 cents in your Robinhood account. You'll be able to invest it. So over time, your spare change will go towards any stock of your picking.
So how much do you have in your pockets?
Never anything.
Never anything. My kids take all of mine too. Okay, Tom Childs and Mark Gurman, thank you both. Continue to watch Bloomberg. We're going to keep covering the headlines from these tech earnings calls as they roll out. That does it for this edition of Bloomberg Technology. And tech earnings will continue Wednesday. We're going to be all over Facebook, Qualcomm, and PayPal out with their quarterly reports after the bell. Plus, we will be joined on the show by AMD CEO Lisa Su. Also, the CEO of LinkedIn, Ryan Roslansky. Both of those conversations you won't want to miss right here on Bloomberg Technology. I'm Emily Chang in San Francisco. This is Bloomberg.